is energy bottoming. Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Mish Schneider, Chief Strategist at marketgauge.com. Hello, Mish. It's great to see you.
It's great to see you as well. Here we are, August, the hot days of summer.
Yes, I know. And I kind of feel like everyone's at the point. We had such a busy month. We had that week where we had so much going on with the Fed and data and jobs report and earnings. And I feel like we're finally getting through that. And everyone's hoping maybe things will be a little bit quiet. But we have some unresolved issues, right? So first of all, hey, everybody joining us live on Substack and YouTube. Great to see you as always. Put your questions and comments in the chat and we'll get to as many of them as we can, as always. But first of all, so today, sort of interesting day. We saw stocks rebound, helped by Apple, Tim Cook making an announcement. They're going to do some more investment in domestic manufacturing, kind of, placating the Trump administration. And so stocks did okay. Treasury yields were a bit higher after a weak auction. We had ISM data that had some mixed signals in it. So just curious, what do you want to start with? Maybe bonds? Do you want to start with what your outlook is with bonds? Since I think everyone was sort of thinking after the jobs cut, okay, we're going to get rate cuts and maybe yields moving on that. But there seems a lot of uncertainty with tariffs still. I don't know. What are you looking at for TLT?
Well, there's two ways to look at it, obviously. One is, of course, just looking at the straight technical analysis, which I know I sent you a chart, and I think it will be interesting to see where we're at. And secondly, there's three ways, actually. Secondly, of course, would be the idea of the Fed coming out today, including Kashari, right? He said that tariffs are still a potential stagflationary concern, so maybe not so fast on the rate cuts. And then, of course, there's the administration itself, which has been relentlessly calling for rate cuts. And as of last week, it almost looked like perhaps the Fed was once again behind the eight ball in not cutting rates after the revisions in the labor market. So when you have that much conflicting information, this is where I always find comfort in what I see in price. And so you can look at, I think there's a couple of things that are really interesting to point out on this chart. Number one, is that if you look at the price action itself, that green horizontal line at the very top is this July calendar range high. And we are big fans here at Market Gauge of dividing the year into two parts, January for 6 months and July for 6 months. And you get a range. And if you look back to the left, you can see that same green horizontal line. The TLTs were not able to clear the January 6-month calendar range. And then yesterday, it got right up to it. And today, with that weak auction that you mentioned, it failed a little bit, but not so horribly. So, we're definitely in more of a recuperation phase because we're not over the 200, yet we're above the 50, which is having a positive slope. And so I still say I would be more to the air of yields could go down and bonds could go up, regardless of what the Fed does. Now, the other really important thing you look at bonds is how it's performing against the SPY, and that would be that middle chart. And right now, what we're kind of seeing here is still a risk-on situation. So that's a good thing. The bonds and the SPYs can go up together, and that's fine. Or I should say the yields can drop and the SPY can go up at the same time. It's when all of a sudden that flips and the bonds continue to rise and the yields continue to fall and the SPY starts to sputter and they start to underperform the bonds. That's something to look for, right? Because everything is so happy right now. And then the bottom chart is really interesting because it shows a bullish divergence in momentum. If you look at the very bottom, that blue and green line, those are the 50 and 200-day moving averages. They're about to make a golden cross where in the price, the 200 is still above. I inadvertently did not show it, but it's above the recent price action. So when you have dots above the moving averages, but price below, we call that a bullish divergence in momentum, even though we had a slight mean reversions today which gave that little sell signal. So I guess you put this all together, and I still think that we're going to see lower yields for whatever reason. I never know what the reason is. I can only tell you what I see in the charts, and especially, Maggie, if we clear that January and now July 6-month calendar range high, which is about 88.50, yeah, we have upward resistance, but I think that kind of shows the writing on the wall.
So lower yields. What about the dollar? And I know you were listening to Dale when he was on Monday, and you guys love and respect each other, but you have a slightly different view, right?
Yeah, and Dale Biden, I interviewed with Dale last week. So it was so interesting because I said that right now the dollar just ran right into resistance and that I was still very bullish in gold. And he feels exactly the opposite. And I looked into some of his work because I have incredible respect for him. He's been at this for even longer than I have, actually. And he's using cycle work. And from a cyclical standpoint, seasonality, he's right. That does happen. Gold goes down in the summer and you have the dollar rise in the summer. But that's not what I'm seeing. And that's why I sent you two more charts. So let's take a look. I sent you a different chart for this one for the monthly chart and the dollar. And then we'll put it all together, what it means when we're done, all the gold, the dollar, and the bonds. So this is a monthly chart. And I'm a huge fan of monthly charts because what they do is they show that cyan line there, that is an 80-month moving average or about a 5 to 6 year business cycle. And then the other line that you see, that blue line that's not as visible as I would like to have shown it, but that there is a 23-month moving average or a 2-year business cycle. The dollar had broken down under the 2-year business cycle several months ago. And then it broke down under the 6 to 8 year business cycle or 6 to 7 year business cycle a couple of months ago. And the blue that you see highlighted there was the last time that happened. And of course, if you look at the dates, when it was? It was like during COVID. And then coming out of COVID, the dollar got stronger again, right? So what we're seeing now is last month, June, we rallied right to, July. God, I am tired. July, we rallied right to the resistance of 100 or at that 80-month moving average. And now we're selling off from there. So it definitely worked off the oversold conditions. It did not change the trend, which is still down. And under around 98, I don't see any reason why this can't make another leg lower. And what does that mean? Of course, we can explore. But that would certainly not be bearish for gold and probably relate to lower yields as well.
Interesting. So this is why I think it's so important to think to sort of look at all of these different frameworks and have some kind of roadmap, because there's a lot of divergence of opinion right now about which way this is going to go. So we did the dollar and TLT. Someone was asking, and I want you to be a little bit specific about what you're talking about because we're going through different assets. If we see a correction, Endry is asking, any of you ladies see a big correction on the horizon? I'm going to guess they're asking about stocks.
Of course they are. Yes. Yeah. And so that's why let's look at gold, because you have, I love to look at things in threes, right? So if this, then that, then this, then, we can pretty much conclude, yes, there'll be a correction. So let's put up the gold chart and then we'll be done with charts because I only sent you 3. So in the same breath, of course, of being bullish in the dollar where I'm seeing the downturn, I'm seeing a lot, and not just Dale, other very smart analysts who I've been following and I'm actually personal friends with are looking at a very bearish gold scenario. And I'm thinking, why? So, sorry. So
is the dog.
The dog. Yeah, he's
purring with you.
He's always with me. Yeah. And then, the big joke, his name is Raul.
That's a wicked laugh. Okay, so gold.
Anyway, so looking at the gold chart, I do not see where that is bearish. I felt that a move over 33.50 was a buy signal. I actually bought it there, and I'm not really even trading much right now. And if it can get through 34.50, I see no reason why this thing can't get to new all-time highs. I really don't. So now let's put it all together. I mean, look, that's a strong bullish phase. I mean, people would look at this chart if it was Palantir and say, oh, Palantir is going to the moon. But because it's gold, people think it's done. And I just don't see it, because we still have all the problems that we have with high debt and high spending and geopolitical risk and, of course, tariffs, and sometimes playing with fire in terms of where the tariffs are put or pressure on Russia. We just really don't know what could happen. And gold is reflecting that uncertainty still. And even though silver had a bigger correction and is back up versus gold a little bit, I still think what gold's telling us here is if you put that together along with yields could fall and the dollar could drop further, that is where, to answer that gentleman's question, I would assume it's gentlemen since he called us ladies, a correction in stocks could occur.
So does it feel like that this is a lot of people are looking at some of these moves and saying, okay, listen, if you did get a pullback in gold, that's a great opportunity to buy because long-term I'm bullish. Like it's a sort of short-term move. Does it feel like if you did get a correction in stocks, it's sort of that, pause that maybe shakes out a little bit of froth, but it's like necessary and needed and maybe a good time to step in? Or do you sense more trouble with stocks? Are you worried about valuations at these levels broadly? I know we're going to get into some individual names, which I know a lot of people are excited about, but broadly, how are you feeling about the S&P 500 here?
Well, right now, I mean, you've got three billionaires, Steve Cohen, Paul Tudor Jones, and Ray Dalio, calling for massive correction because they see the underlying risks. They see cracks in the entire system. Now, I don't know if they're going to be right or not, but I certainly don't like to argue too much, especially with Paul Tudor Jones, who I grew up with, actually, because they have a vision based on a lot of experience. So I'm not saying that I'm in their camp. I'm just saying that, especially what I just covered, those signs would be a dropping dollar and falling yields, especially if the Fed doesn't even do anything, and a rising gold could put them in the right mindset. But how I'm feeling right now is that we have a lot of grandiose plans here, not just the CAPEX that we heard out of the earnings, out of some of the big companies like Meta, of course, and NVIDIA. And those stocks are doing great. But more like, how do we support this infrastructure that they're all planning to create in the United States? It takes time, number one. It takes labor, although lots of robotics in there as well. And Symbotic, which has been one of my top picks, is up 300% this year. But it also takes raw materials. And those raw materials right now, whether they're tariffed or not, don't all happen in the United States. So I'm thinking this is all great, and certainly the momentum has been in the favor of all of this. But at what point does the reality set in that we cannot meet what these great intentions are of these massive companies bringing a presence back to the United States? That's the biggest long-term view that I have. But I don't see any signs of worry about it yet, but that's certainly something I would look for.
Interestingly, when you're talking about some of the materials, I know part of it is rare earth, materials, which we know come from China. But J&J asking an interesting question. Do you have a view on industrial metals? We talked about gold and silver. Do you have a view on industrial metals if the S&P, SPY rather, is near highs and Dixie plus yields go lower, then is it bullish metals? How are you looking at industrial metals at all, Mish?
Well, yeah, I've been looking at copper and aluminum in particular, those two. I can't say that I've covered every single one. I know platinum and palladium made big moves. And a lot of these stocks, a lot of these industrial metals have had corrections. We've been long, XME in our quant fund for a long, long time, and that's done very well. So, the typical story, right, is Dr. Copper measures the economy, but we know that copper now has other uses, especially in the whole build out of data centers and AI and utilities to get these things gone, distributed from one place to another. We know that Chile had a big accident in their copper mine. They shut it down. So, I think the moral of the story for these industrial metals is whether they're going to be bullish or not is going to depend on two things. Number one is, can we get that vision back to this country where we start to actually build out this infrastructure, like what we heard with Apple, planning to spend all that money. Was it 600 million or billion? I don't remember now, what they said that they were going to bring back in infrastructure. We've heard this from other companies. These raw materials, these industrial metals as well, that would be very bullish for them. And if they cannot happen and we go into some kind of recession as a result, which is not totally crazy to bring that up as a potential down the road, then of course that would be bearish for them. So right now we have to hope for the former, not the latter, right? That these visions get realized and we bring things home, and it's bullish for metals.
Yeah. 600 billion. I don't think Trump would have liked million. I think billion.
I know. I feel like Austin Powers when I did that. 1 million. $1 billion, right?
I love it. We had a question. So let's talk, we have a question about not gas, but let's talk generally energy because we sort of teased it coming in as to whether energy was, maybe bottoming. Is it time for energy to make a move? There have been some interesting comments on this lately. How are you thinking about the energy sector?
Well, again, this to me is the biggest head scratcher of all. I understand why utility companies, and then you look at a company like GEV that has done extraordinarily well as energy demands become more and more of a thing, along with what we just talked about with metals and concrete and all of it, by the way. I don't understand why they're so underperforming, particularly, I understand that there's been a lot of bearishness around oil. But let's start with oil, because I don't even consider oil to be the number one kingpin of energy distribution, but it is a thing, right? Certainly for the grid system. We have the Permian Basin, where I live, basically halting production of oil. Once we get under $64 a barrel, smaller oil companies can't even afford to drill or distribute oil or refine it. Under 60, that's when you get the bigger companies. So you have the camp that thinks that we have too much oil and oil's going down. And of course, again, the administration wants lower oil prices. And that's not necessarily a good thing for the economy, by the way. There's a catch-22 on that. But yet at the same time, we have oil rigs going down, we have demand rising, and we had Armaco come out today and say that they're bullish oil, basically, because they see the amount of production now, even though we had the production rise for OPEC plus, they're basically pulling back. And now with demand increasing, what does that mean? So I think we have to first watch oil. $64 is probably a good price to look at. I don't believe it's going to go under 60. People are looking for 50. If it holds 64, gets back to 68, it tried it once, it didn't make it, I would think that would be bullish. Let's go to natural gas. To me, that is stupidly cheap, right? Yes, we have a lot of natural gas, and they just made an announcement today that they're going to make a new pipeline in the Permian Basin to get gas going. But it's the same kind of thing. I've spoken to a lot of natural gas producers in this state, New Mexico, and they are very bullish on natural gas prices because they believe that it is in such high demand for all of these data centers and AI. Yeah, uranium is great, but it's not here yet. This is now and uranium is later, and then now it's too cheap. And so again, producers hold back when it's too cheap. So today we saw a little bit of a rally in nat gas. I'd like to see, I'm watching the September contract, as it rolls off because it's futures. The September contract, we get through 320. It got up to 310 or something, 311 today. I think it is bottoming, and I'm willing to make a bet on that. I made one bet. I got out. I lost a little money. I probe, and that's how I do with commodities. And then of course, we have to look at uranium. So we had the massive earnings, and CCJ has done incredibly well, and URA has done incredibly well. In fact, that's something we've talked about on your show. Yeah. I told you I was long URA at 20, so that's 100%. That's a double. And yet, I don't know how much more upside it has right here, because it maybe ran a little bit ahead of itself. So I would watch this 38 to 42 level pivotal. And then finally, the last thing I'm going to say about this is XLE, which is the ETF where a lot of the big energy companies are. Oh, by the way, pay dividends, interestingly enough, including XLE itself. So a lot of people like to buy this stuff because of dividends. And some of them pay really good dividends, and those dividends have really increased through the years. And we had some good earnings and not so good earnings in the oil companies. But I think you really have to watch that XLE. It's been sort of holding at the lows for the last 2 months at the same level. And if we can continue to hold that and let's say get through really basically 90, 86 has been kind of the low. If we can get back through 88, then 89, and then 90, we have a massive price breakout on charts. But more importantly, it tells you that finally energy is going to start maybe playing a little catch up to the rest of what AI has already been doing.
Yeah. And as everyone's pointing out, Cosmo, I think that answers your question on Mish's targets for XLE. And Dr. Dan pointing out on Substack, without massive increases in energy for power, does AI infrastructure investment really matter? Copper, data centers. I mean, everyone knows these two things are integrally, combined. And I can tell you at the energy conference I was at in June, that's all we talked about across the majors, across all parts of the energy ecosystem. I mean, everyone
Interesting.
is keenly aware of this.
So why hasn't it happened yet, right?
Because it's complicated, right? I
It's
mean, there are and you have lots of different interests that, speak a completely different language, have very different metrics. When you're talking about scalers, hyperscalers, utilities, and energy companies at the same table, these are very different industries that, maybe haven't kind of collaborated before. So it's super interesting. But I mean, that's what we have to watch, right? Because if the timing doesn't line up, then you are going to have to see some sort of correction, whether Dan's saying you're going to see that investment slow down if energy is not there, or vice versa. You see energy catch up to this sort of, big enthusiasm we see on the AI build out. One or the other, these things are going to have to move in tandem, one would think.
Exactly. That is exactly. And we don't know the answer to that yet. But I do know that it is definitely the thing to watch to answer the very first question we had, is whether or not we're heading toward a massive correction or not.
I want to just mention, Chet, if you don't mind, I'm going to read this comment out loud because it's so smart and good. It's a sort of question, but we can all think about it. Who else feels IXC is a better play than XLE? Former is international exposure of energy. Lower dollar and AI productivity will help with those companies. Thank you for that, Chet. That's a really great comment. We can all think about that and check that out. And I'll ask that of future guests as well. I wanted to ask you, while we're on energy though, Mish, do you still like solar? You liked solar before, I think First Solar. Is that one of your names that you had? Are you still feeling that way?
Yes, certain names. And actually, interestingly, today I've been watching a few names. I was in solar with Solar Edge a while ago. Right now, I'm actually not in very many things from a discretionary standpoint. We have a whole quantitative system with many models, and that we can talk about some of the positions they're in and what I'm looking at from a discretionary standpoint. So I just want to preface by saying, right now, I'm in more of the take it easy in August mode than put a lot of money to work.
Yeah, I think a lot of us are thinking about that. What do we want to do? But maybe let's reset first.
And I feel sometimes like I must be a dinosaur saying that, because all I hear, and I go on spaces with all these young kids, right? And I kind of feel, like I'm the elder citizen there, and they're all saying, no matter what, you just keep buying the dips because the market always goes up. Just keep buying the dips because just keep buying those great names because they're only going to go up forever. And if they dip, that's the opportunity. And I'm saying, sometimes it's a really good opportunity to trade more actively, especially with so many unknowns, like we just so succinctly pointed out. Go to cash when you don't know. And then, you'll know soon enough. I mean, I'll know soon enough. I feel confident enough in that. I just don't know now. So I've got just a little teeny bit on in gold and in bonds. That's it. So I actually got out of my XLE. I was long it. I got out today with a scratch. I said, you know what? I'm going away in a couple of days. I don't need to worry about this. But now let's talk about solar. I'm watching First Solar. First Solar looks like it could break out if it gets through that July. Oh, so remember that very first chart I showed you, the July calendar range high. It's really easy for you all. If you don't have our indicators in market gauge, it doesn't matter. If you just take July, the first 10 trading days of July, and put a line at the top of what that high was and that low, and watch the things you like. First Solar is one that comes to mind. I can't remember I think it was 190. If it gets through 190, that takes out the July highs. That's a good sign. If it Jinko Solar, which is the Chinese solar company, there was a big story about how they've overbuilt like China always does, and that was going to be negative for solar. Well, today, I think Jinko Solar is starting to look interesting. It corrected right down to major technical support and rallied a little bit. But Enphase has been crap. I thought Enphase might start actually looking interesting. It hasn't. That's still in a downtrend. So I think you have to pick and choose very carefully, just like you have to pick and choose even with AI stocks, right? Because you had, the MSCI, is that the one that went way down like by 20%, and then you had AMD come in by 10% lower, which, by the way, our fund bought today on that dip. And then you have others that have done extraordinarily well. So there you go.
So I know that on the list of things you were looking at, you had Palantir, but did you take some profits there? Did you take that off?
We've
And
taken two
Nvidia?
profits. Yeah, we've taken two profits in Palantir. Again, let's discern from this is the quant model. So the quant model, just to explain for 2 seconds, is momentum based, right? It works on a trend strength indicator. So these number crunching that our computers do with an AI inlay, by the way, to determine what has the strongest trend strength indicator, and certainly Palantir. And so it often buys in nosebleed territory where me as a discretionary trader would probably go, oh my God, right? But that's worked out really well this year and historically. So yeah, Palantir at 180, we took some profit, but we have a trailing stop now, I think at 165 in that one. And like I said, AMD, we bought on the open at around 163 and see what happens there. We have a couple of other things and we have NVIDIA, but again, we've taken some profits there. We have QBTS, which has been another, that's a quantum computing stock. That's been a hot stock. So that's where our playground is, in the defense stocks, in the AI stocks, in the robotic stocks, and in some of the space stocks, in the quantum stocks. Yeah.
When your kid is hurting and there's nothing you can do about it.
Mm. And what about drones? You mentioned that before. It is a sort of hot area for some people to play in. Is that part of what you're looking at in defense?
Well, yeah. I mean, again, drone as a defense is a future, right? So you got to find stocks that haven't already exploded. I was looking at ONDS. That's Drone Communication Network. I don't know what the actual company is. Today it exploded again. But where did it explode to? It was trading at 3. Now it's trading at 320. So it's still a $3 stock, right? And we're not talking about a major move. And the other one that I liked was UMAC. It's Autonomous Fleet Control. Keep an eye on that. And that also today actually sold off. So you can see how nuanced it is. You really have to, either you have to know nothing and just follow the crowd when everybody's talking about Oscar Health, go in and buy Oscar Health and then get out. Or you have to really have some kind of a discerning charting ability to be able to see what's holding and what's breaking out and what's just chopping.
Mm. Is there anything that you feel, I know that it's almost unfair because you just said you're sort of like taking this period to sort of, reset and look across the things that you've had on your pad and not and try to figure it out. But is there anything that you feel super convicted about right now? Or is this one of those periods where there's a lot of uncertainty and fog ahead of us? Because it's going to be, I feel like it's going to come back in September and things are really going to rock and roll. But everyone I talk to has very divided opinions about what that looks like, which is interesting. I know sometimes you feel like very convicted about things. Do you have that right now or no?
Just like I said in the very beginning, and I'll say it again, this is a good time to kind of chill out.
Yeah. And also, I just want to underscore that if you're paying attention, this is the discipline of having a framework and having as many years trading under her belt as Mish does. You're always taking your profits when you can, right? You're always assessing that, not necessarily falling in love with the narrative of it, but really being disciplined so that, you have powder dry if there is a downturn or if a name does fall for another reason, that you have the ability to step back in. You guys are always so great about sharing that wisdom. And especially if you're newer at this, it's sometimes hard. It's hard to do, but it's really necessary. Speaking of a break, Mish and I were joking ahead of time. We're both feeling that. And we do have some housekeeping. We are going to be taking a break. So many of you know we're coming up on a year since we launched Talking Markets. And it's been an incredible journey. We just want to say big thanks to all of you who have joined, who subscribed, who come and listen every week, who are so awesome in the chats. We genuinely have the best community out there. But we're going to go dark for the rest of August. No live shows, but we're going to be toiling. First of all, my hard drive is just dangerously close to crashing. I think Mish feels the same about hers because we're super hardworking people. Many of you are also taking a much needed break. I hope you do that. Go enjoy your families, decompress. It's going to be so busy for the fall. So take some time for yourself. But most importantly, we have some really big plans brewing. And so we're going to be working working really hard, Laura and I, behind the scenes to get ready for year 2. So we have some really fun announcements coming. We're going to start sharing some of those details soon. So if you are not on our email list or following us on Substack, please do so, because that's where we're going to be dropping some of this stuff, some Easter eggs for you, and some of the updates coming before we get back on September 3rd here to kick off the new chapter. So in the meantime, you can DM us on Substack and share and email us and share your thoughts, your ideas, your guest suggestions, whatever you want to throw at us. We'll be reading them all, and then we'll communicate more. But Mish, you deserve a break. I know you're going to take some time. So I hope you enjoy it.
I'll be back August 25th. And congratulations on year 1, Maggie. I can't wait to see what you've got in store for year 2.
Thank you. Well, you're such a big part of it. And I look forward to hooking up with you again in the fall and after we both have a break, and seeing what's buzzing. Obviously goes without saying, if everything falls apart and hits the fan, we will pop back on as needed. We did that last year before we were even up and running when we had the yen carry blow up. So we will do that. But hopefully it'll be quiet so we can all get some R&R. So thank you, Mish, as always. So great to catch up with you. Enjoy your break. Thanks, everybody. Have a great rest of the summer, and we'll see you in September. As always, take care and good luck out there.